Hello again, everybody. This is Peter with Dowling Solutions. Today, I'd like to talk about job costing and the best practices for month-end reconciliation using QuickBooks Desktop Premier Edition. In this video, I'm going to go over how to set up jobs, how to set up items, and then I'm just going to go quickly over posting an invoice, payable, and journal entry, and job costing, all of those entries. And then finally, I'm going to go over the best practices for reconciling the gross margin figure. And to do this, I'm going to use two of the built-in reports inside of QuickBooks Desktop, and that's the profit and loss statement and also the job profitability summary reports. So using those two reports, we'll be able to find out any discrepancies in our numbers and make sure all the costs are in the right place. So let's get started with that.
Okay, so here I am in QuickBooks Premier Desktop. The main purpose here in our job costing for this tutorial is in the month-end or year-end reporting. So specifically when at the end of the month you produce a profit and loss statement, and the gross margin amount that shows up on that statement should exactly match what's showing in the job profitability summary. So essentially when you send out the P&L for the month, there's a gross margin amount there, and then when you send the details on that gross margin on a job-by-job basis, the gross margin should exactly match each other. If they don't, something is wrong, and you have to find the missing pieces. So I'll go over first how to properly job cost, and then I will go over kind of what I do to reconcile the gross margin amounts at the end of the month. So in order to properly job cost, the first thing you need to do is to set up jobs. The next thing is to properly set up items. And then you got to learn how to properly post payable invoice and receivable invoice and journal entry so that's properly job cost. So properly job costed. So let's start with setting up a job. So in order to do that, it's fairly simple. Just go to go to customers, customer center. And this gives you a list of all your different customers. So you notice under Karen Bentley, she already has two jobs, kitchen and roof and attic underneath her. I'm just going to add a new job under her. So I'm going to right click on her and go to add job. I'm going to call the job office. So I'm going to work on her office. I'm not going to fill out any of the other details right now. I just want to set up the job. So there we go. Office job is entered. So the next thing to do is to properly set up items. So let's say we have a independent contractor who's going to do work on that office job. He bills us $50 for every hour that he works, and we in turn bill the client $75 an hour for every hour that he works. So let's enter that information inside of a item. So I'm going to go to lists, item lists, and here's all our items, but I'm just going to go down to the bottom to item and click new. And yes, I'm going to say the type is a service type. The item name will be, let's call him Roger Smith. I can give him a sub item. You can categorize all your items. For example, if you have a whole bunch of contractors or contractors with different skills, you can give them all different categories to more easily find them. But in this case, I'm just going to add a Roger Smith as an item on its own. He is an independent contractor, so this must be checked for an independent contractor because it'll allow you to actually put in the cost information associated with him. If Roger Smith instead was an internal employee, an internal employee that we send out to a client site and we bill for those hours, we wouldn't select this button. All we would have to do is select or fill out the information regarding the bill rates for that employee. All the cost information for that employee would be done through the Employee Center. But in this case, Roger Smith is an independent contractor, so we will select this button. And now it gives us, it prompts us to enter information regarding the purchase transactions. So for this, I will say services provided by Roger Smith. So that will show up on his invoices when we select his item. His costs, he charges us $50 an hour. The tax code is set to GST, so that's good. The expense account that we're going to use, so we have to make sure that all costs associated with Roger Smith go to the correct line item on the P&L. So he is going to be working at client sites for our jobs. So I'm going to put him under subcontractors, which is a cost of goods sold account. Select that. And then similarly, we'll fill out the billing information. So we bill him out at $75 an hour. And the income account now we'll have to select. And I'm going to select construction income, which is an income account. So I'll select that. And there we go. So Roger Smith is set up with his item. And there he is inside of our items list. So next up is, let's pretend Roger sends us an invoice for hours worked in the previous month. So let's go to vendors, enter bills. Now I already set up Roger as a vendor. I think I called him Roger Smith Inc. There he is. We're going to make sure the date is November 30th, 2022. This is a test company and they're way ahead of us right now, but for the purposes of this video anyways, last month is November of 2022. Let's pretend his invoice number was that. And now we're given the option to enter the expense directly to an account. So I could select here and just go to subcontractors down the list here. But we already set up his item. So if I select the item tab and type in his item, which is Roger Smith, here is all the information that we entered. So his description is services provided by Roger Smith, and I'll just add November 2022 to that. Let's say he worked 10 hours. The cost is already entered in there because that's also part of the item, so $50 an hour. Obviously, we'd be cross-referencing this with his actual invoice. So if his invoice had $60 an hour, we know that there's an issue and we can look into that. But let's say everything's okay. 10 hours at $50 an hour, $500. Now this is where the job costing piece comes in. We know that he was doing work on the office for Karen Bentley. So I'll just type that in, and there we go. Billable is checked, and that's good. So when you're creating an invoice to, in this case, Karen Bentley, under Office, it will automatically take all that information, all these costs, and any other employees or contractors that were working on the job that have billable information in it. It'll actually just take that information and plunk it onto their invoice, so you don't have to do that extra step of finding out exactly what to invoice. I actually have that feature turned off in this test company, so you won't actually see that when we enter the invoice. But we don't need it for this tutorial anyways. So there we go. We have the invoice created. I'm just going to copy and paste this. I always put memos in both fields. So that's good, and we'll just say save and close. Perfect. And now let's do the job costing for an invoice. So I'm going to invoice that office job. I'm going to go to customers, create invoice. And the job costing for this is fairly easy because the invoice is actually done on the job itself. So all the invoices on that job are automatically tagged with that job cost. So in this case, we're going to do the office job, Karen Bentley office. Select that. And you notice nothing popped up as far as, hey, there's some billable costs here that you can put on this invoice. I turned that feature off. But moving on. So we're going to say we're going to bill Karen Bentley for the 10 hours that Roger Smith worked in November 2022. His bill rate is 75. That's automatically taken over from the item itself. So there we go. We have that invoice created. We could fill out a little bit more information, like a PO number if there was one, that type of thing, but I'm going to leave that for now. And the date is right, and I'll just say save and close. Perfect. The next thing I'm going to go over is entering a journal entry. So to do that, you go to Company, Make General Journal Entries. Make sure the date's right, November, yeah. So one reason why you would do a journal entry, there's many reasons why, but one big reason I guess would be at the end of every month, you may have contractors or some kind of costs that you know you have incurred in the month, but you actually haven't been billed for it yet. So let's say Roger worked 2 hours at the end of November, but didn't invoice us for those hours yet. He'll do that later in December. But we do want to add those costs because they were incurred in November. So we want to post those costs into November. And in order to do that, you just do a little journal entry here. So I'm going to post it to subcontractors. 2 hours at $50 an hour is $100. My memo is going to be contractor accrual, and the name is actually the job that you're going to job cost to. So in this case, he worked, let's say, still on that the office job. And billable, I'm going to deselect that because when Roger actually sends us his bill in December, we could select his actual invoice that he sends us as billable at that point. So I don't want to do that on the accrual journal entry right now. And where do I send the credit to? It's a balance sheet account that I set up called Net Payroll Accrual. So there it is, $100. What I normally do in this, like again, this is a test company, but what I normally do is I set up a job just called admin. And whenever I'm doing journal entries, I just make sure everything has a job. So if it's a balance sheet account, I would post it to the admin job. I don't have the admin job set up on this company file, so I'm just going to leave it blank. And that'll work just fine. So there we go. There's the accrual setup. Just if you're curious, in December, what I would do is I would go into this journal entry and hit the reverse button, and then it would make a reversed journal entry. So the same journal entry as this, except the credits and debit reversed and the date would be made for December 1st. So then you start December completely fresh. And then you could just go ahead and enter his actual invoice in that month with his actual hours. And then you just get the costs into the right months that way. So there we go, that is done. I will save and close that. And so, okay, so we've gone through setting up a job, setting up an item, posting an invoice, posting a receivable invoice, and posting a journal entry. So the next part is the interesting part, which is when you're reconciling your accounts at the end of the month. You want to make sure that the reports that you're sending out actually make sense. So one report in particular that everybody wants at the end of every month is the profit and loss statement. So let's just run that. I just went to Reports, Report Center, and I'm going to select this report and just do for last month, and then I'll run it. So you notice here the gross profit is $15,150. So we'll just kind of keep that in mind, and I'll just move this report over a little bit. And I'm going to do another report, which is in jobs, time, and mileage. And it's the first report that shows up there. I'm also going to select the dates for last month. Hit run. Just close that down. So now this job profitability summary shows all the costs associated with jobs, all the revenue associated with jobs, and the difference, which is just your gross margin. The total being $14,938. And you compare that to your P&L that says $15,150. Something is off. You want these two numbers, in most cases, you want these numbers to match. Because if you're sending a P&L and then you show along with that the details of your gross margin, job by job, you want it to match. And if they don't match, you need some kind of an explanation. So to get these to match, we got to find out what exactly is going wrong. Now, there's two main cases that would make these numbers different. Number one is something showing up on your P&L above your gross profit line that doesn't appear in this report, or vice versa. So something that doesn't that shows up on your job profitability summary that isn't inside of your profit and loss. So how do we find that nice and easy? One way I find real easy is to go into your profit and loss report. Now where it says gross profit, I can double click on that amount and it will show me all the transactions that affect the gross margin in the month as per that report. So in the name field is where things get job costed. So I know it's a job if I see a little colon and a job name after it. So McDonald, Tracy, colon, second story. That is the account Tracy McDonald, and the job is second story. So if I go through here, everything looks fine. Everything looks fine until you get to here. So Beretta's building supplies. So that is not job costed. It doesn't have a job associated with it. There's no colon, there's no name after it. So what I'm going to do is double click on that and see what's going on with that transaction. Well, here we go. Here are all the job costing pieces of information. This last one, direct materials, rental equipment, does not have a job associated with it. So in this case, it would actually post this rental equipment cost to the P&L, but it won't actually show up in your job cost report, your job profitability summary. So I know that this was the hangar project. I'm going to give it that job. Perfect. Save and close. Say yes. So there we go. Now, do they match? Let's find out. Just close that down. Here's my profit and loss. I have 15,150, and on this side we have 13,638. So there's still something wrong. So the next thing I'll do is I'll go into my job profitability summary report, and I will customize the report. What I'll do here is I want to see all the costs and revenues associated with these jobs that are not gross margin line items. So simply just go to filters, account, multiple accounts, and I want to select everything that is not a gross margin line item. So nothing that's a revenue, nothing that's a direct job cost of goods sold or subcontractor amounts, things like that. So I'm just going to go through here, select everything. There are a lot of them. Okay, so construction income is a gross profit amount. Uncategorized income is as well. So direct labor costs, we want to leave those out, subcontractors, and then everything else we select. Now you could memorize these reports as well inside of QuickBooks, so every time you do this, you don't have to actually go through all this hassle of selecting accounts and deselecting accounts. But I'm just going to go through here and select all these. We're almost done. There are a lot of accounts here. There we go. So I have everything selected that's not a gross margin account. Hit OK. So here we are under Tracy McDonald, second story. There is a cost of $1,512 that was posted to a job, but was not posted to a gross margin line item on the P&L. So let's see what this is. So I can see right from here, it's called, we called it site materials, and it's going to the account freight and shipping, which is an overhead account. So that's the issue right there. It's a check. So let's just look at the details on this check. There's the freight and shipping. And let's just change this to direct materials. That was $70 and that was 0. 1982. Let's see if that works here for us. Perfect. So there we go. So we just changed the account that it's going to. So now when I'm looking at that job profitability summary that has selected all the accounts that are not gross margin accounts, it's 0 now. So that's good. That's a good thing. So now that is our P&L, and I'm just going to open the same job profitability summary report now with the updated data. So we have a total gross margin here showing 13,638, and our P&L here has a gross margin or gross profit of 13,638 as well. So now when we send out the profit and loss, we can send it along with a job profitability summary report that details exactly where all the gross margin is coming from, and they match. Everything makes sense. This is a very powerful tool especially if you're doing time and material projects, because I can run this job profitability summary at any time, and I can see the costs associated with every job. And for example, in this case, we had $100 here for family room, but we haven't invoiced anything yet. So we have a negative 100 gross margin on that. So I would look into that and say, well, maybe there's something that we should be invoicing on that, which is really nice at the end of every month to kind of go through that. One thing this doesn't show you is anything that should have been posted but hasn't been posted. Obviously, you do that through your reconciliation of other balance sheet accounts and things like that. But this is a very simple way of kind of going through and making sure at least your job costing information is posted to the right spot on the income statement. That is it. Hopefully you have enjoyed this tutorial, and there will be more coming soon. Thanks for watching.